Hello, this is a Chartprofit video. 29th of April, we're just about 1.5 hours into the trading day. This from the pre-open today. We're looking at the E-mini S&P here on the left. If you recall, as I wrote on Monday, late last week on the Friday we had enough volume at this level here to lift the minor point of control to 2086, and at the start of the week I set up here on Monday that this level was important to monitor. I'm watching price action relative to this level as a guide to short-term strength weakness, and you will notice that on Monday and Tuesday and Wednesday the E-mini was unable to generate a value area above that level. On Thursday it attempted to do that up here, but then late in the day at that point of control here we suddenly started a fast move down, which is quite normal. Directional moves usually start from the previous point of control, and so today, as said, this may be the start of a new distribution, and therefore I'm cautious here. Hopefully reactive buyers will step in early in today's session, but overnight yesterday the E-mini was spending time around this sort of level here, around the lows. So we're looking here on an hourly chart, and you can see that level there, 2086. The major support, or more important support, let's say, is down here at 2041, and currently the E-mini is printing around sort of mid 2050s. So in the longer term, as long as the E-mini holds above 2041, it's still in a long-term price location of strength. Price below here would be a worry. Here we're looking at the pulse chart for the S&P. I've got those imbalances from the day-to-day analysis marked on here. The last one was red up here, and as we know on the spider here, 209.90 is big time resistance, and all we've done so far is probed it, and that's been rejected, which is a little worry. In the short term, the fact that price momentum has actually dipped again here is a concern, but as long as these two indicators at the bottom remain green and the E-mini stays above 2041, we'd call this corrective activity in the longer time frame. Here's the daily breadth indicators. I mentioned the last few videos each week that as the price action has come higher, we've seen some divergences here with the breadth indicators. But as long as this middle indicator stays above 0 and this one stays above 50, this indicator in the middle here, the breadth, will remain green. Just quickly review the major stock index ETFs. This is the spider. The support is at 204.50. That's the 5-month point of control here, and there you can see that probe that I just showed you that's been rejected. Certainly want to see this level providing support. Price down here puts it in a really weak price location. Just to remind you where the support is on the Russell 2000 ETF, it's at this halfway point here, which is a little lower, 111.50. We'll have a look at the sentiment indicators. I did say that my version of the RIDEX assets ratio is actually lower on Thursday at 5.18. But we also said here that Tuesday's ratio at 5.27, that was the highest since early January. That was just here, just exceeding the previous high ratio this year. So that was a multi-month high for the ratio, but in the long term you can see that the ratio is relatively low at around 5. It's been up at 14 last year. Looking at the bull fund assets in isolation, they have rallied somewhat from that extreme low over here, just tailed off a little bit. The bear fund assets in isolation this week have hit their lowest level since December, so a multi-month low for bear fund assets. And you can see those assets have halved just about from the peak at the low here. So a lot less retail traders prepared to commit to the bear side than there have been for a few months. That may be a little warning there. Look at the public poll from AAII. Bulls percent was lower this week at 27.4, and the bears percent was higher at 28.6. To me this is very neutral. We've got the 4-week moving average of net here in black. It's been back in positive territory for a couple of months, but this is not really signalling much at all here at the moment. Not the case in the investors' intelligence. We were watching this 4-week moving average of net, and I said that when it exceeded the previous peak, which was late last year, that can often be the point where the market will turn lower. It's done that just for the last couple of weeks. It's just sneaked above that level last week, as we mentioned. It's maybe indicating just up here a little bit too much enthusiasm. Look at US fund flows. Reported equity fund, including ETF inflows of 101 million in the week to the 27th of April. If you exclude the ETF data, there was actually an outflow of $4.5 billion. And this indicator, we follow the 4-week flow in black here. Certainly not from this indicator are we seeing excessive optimism. Here's the important levels on the TLT, the T-bond ETF chart. The halfway point from this high, as we know, is big support down here, just below 127. And the 6-month point of control, just very recently up here, moved to 130.78. And we noted that when that happened, price sold off pretty sharply from that point down to here. It's attempting to rally at the moment. Price down here would be a sign of real weakness for bonds. This is GLD, the gold ETF. As you know, the point of control moved up from this level here, about 115.50, after supporting price here, moved up to 118.22, and we're above that level. Strong price location, and we're now busting out here to a new high. Really having a very strong day today. Really the flip side of that is the weakness in the dollar. The 2-year point of control migrated in here somewhere to 94.79, and we've been saying for a while now that price below this level is really weak price location, and the dollar heading lower, sharply lower this week. And that's really boosting the Euro FX chart. All this consolidation here above the 3-year point of control, this level here. So this looking now like a higher low, as I mentioned in the pre-open. So point of control and a higher low can be a very powerful pattern. The Aussie dollar, obviously also weak. You can see here that it's struggling with its major at 0.7650 here. Very weak currency at the moment, just over the last couple of weeks. So finally we look at the European indices. This is the DAX. The major at 97.40 here. Should be big support. If it's tested, let's hope so. Never did manage to print time above its halfway point, and we're ending the week pretty weak down here. And here's the FTSE, UK FTSE 100. The halfway point of last year's high is here, and we've been struggling just over the last few days. At the end of last week, we came lower, and the whole of this week we've been struggling with that price level there. Personally, I was hoping that the FTSE would do this, make a higher low on that level, but that's not the pattern that's played out. Until the FTSE gets back above there, it's a weak chart. Okay, that concludes my review of the major market charts at the end of this week. Once again, I wish you a good weekend, and thank you for watching.